I want to go through and do a quick video on how a business actually makes money. Now, I'm going to do this a little bit jank, so just bear with. So when you're looking at how a business actually makes money, you want to start with their leads, the amount of leads they're getting per year. So, for example, this business here is marketing on Facebook or things like that, and it's getting 100,000 leads per year. So these people are entering into their marketing funnel, and as they go down, they're eventually going to get to a buying decision. So the amount of people that come through your marketing funnel and actually purchase is what we call your conversion rate. So let's say this business is getting 100,000 leads, converts at a 5% rate. It's going to get 5,000 people every year are going to purchase from this business. So now once you know the amount of leads you're getting and your conversion rate, now you need to know how much money they're actually purchasing on average. Again, this is the average transaction value. So this doesn't mean that everyone's going to purchase this amount. Some people will purchase 500, some people will purchase $50, right? It'll all even out to a certain average transaction. The average person that goes there will buy a certain amount of things. So let's say you get 5,000 people coming to this business and they averagely transact at $100, which means you're going to end up with $500,000 in revenue from this business. But you don't want someone to just buy and never come back, right? You want to increase the amount of transactions per year that you get. If people are just coming, buying your products and never coming back, you probably have a really bad business model or a bad product. So we want to look at this and we go, okay, we want to get these people to actually not just shop once, but come back, say twice a year for this business. So what you do is you take this 500,000, times it by 2, the amount of times on average someone comes back every year. And this will give you your total revenue for the business, right? So this business is getting 100,000 leads, 5% conversion rate, $100 transaction value, and they're coming back shopping twice a year, means $1 million in rev. But you don't get to keep revenue. Revenue is just the money your business has brought in. You got this annoying thing called expenses. And expenses are generally split into two different areas, your cost of goods sold and your overheads. So cost of goods sold is how much it costs to, say, buy a product or actually do the sale. So for example, let's say this business is selling t-shirts and they sell those shirts for $100 each and they buy them for $50. That means this business has a 50% gross profit margin, which means that every time it sells $100, it's only making $50, right? So what you do is you take this margin, you times it by the revenue, and you'll get your gross profit. So gross profit is all the money that you get to have to spend on actually running the business, right? And that's where you minus your overheads to get your net profit. So overheads are everything else. So these are things like wages, rent, utilities, power, all of that sort of stuff is all in overheads. So once you get your gross profit, you minus by overhead, then you get to your net profit. So net profit is the amount of money that your business has actually made. So you haven't made $1 million, you've only made $100,000 for this business. So now what do we do if we want to actually increase this number, right? We want to go, okay, I want to make $200,000 or $300,000. I don't want to, instead of making $100,000. What a lot of people make the mistake of is they focus on marketing only. So they come into the business and they go, all right, I need to double my net profit. I'm going to double my marketing, right? But marketing is generally not the most efficient thing you can do. It's not that you don't want to focus on it. It's incredibly important to focus on it. But generally when you increase your marketing, it's very expensive to do so. And you don't get a compounding effect. What you want to do is you want to look at ways on how you can improve each one of these areas. So as, say, Jimmy comes through your store and you get more people coming into the funnel. And then you convert more of those people into here. And then more of those people that get converted actually spend more money. And those people that spend more money shop more often into your business. And again, you get this compounding effect because it's times more leads, times more conversion rate, times more transaction value, times more per year, right? And I'm going to show you how this looks like in a calculator that we created. So this is a calculator that we created for our consulting business, but you can use it for free in the link below. So this is a business. This is the same business with all the same metrics, 100,000 leads, etc. On the side. So let's look what happens when we go and increase different numbers. So let's say we increase the average leads by 10%. We've increased net profit by 50%, but we might have had to pay for these leads. Let's say it cost us $30,000 to actually get those leads. So we've only really increased net profit by $20,000. But then what we want to do is you want to come in and say, okay, let's increase each one of these other areas by 10%. Now increase conversion rate, increase the average client transactions, attraction value, etc. We won't touch cost of goods sold because some businesses have struggled getting this down. And let's say it costs us an extra 20 grand to do that because you might have to update your website, change copy, things like that. So we end up having a $50,000 cost to do all this, but you can see that this business has now gone from $100,000 a year to almost $300,000 a year. It's almost tripled its overall net profit for the business just by making small changes in each one of these areas. Whereas if you wanted to make this change overall in just your sort of lead gen, you might have to increase it to say 30%, or even that won't do it, say 50%. So you got 50%, but now this might literally cost you, say, 100 grand to do. Therefore, you still aren't even getting the same amount of net profit. And increasing leads by 50% is much more difficult than obviously increasing them by 10% and just improving these other areas. So I hope this sort of helps you understand on how a business actually makes money, and then how they can actually, what they can actually do to improve it overall. And so that you shouldn't just focus on one area, you should focus on the holistic approach and work on all these different areas. So I hope that's helpful. Link in the description for the calculator if you want to use it. But yeah, thanks heaps. Bye.